But like I was saying, as far as planning out your trades and don't get caught holding the bag. And I've been guilty of this as well. But yeah, if you see if you put on a trade and it's clearly not going in your direction, it's best to just go ahead and cut your losses because, like I said, you're just gonna make it worse. Even though sometimes it may hurt to take that loss and actually realize the loss, it's even worse if you just sit there and let it drag on and drag on because it ties up your capital, and then the opportunity cost is another thing. And that's why it's so important to do your preparation as far as making sure that you mark out, basically plan out your trades ahead of time. Make sure you got the right support and resistances, the levels, and etc. So you have a plan formulated. Like I was saying, you're watching the price action as it starts to consolidate. As you see it start to consolidate and hold a support and not break down further, that's kind of a bullish sign. All right. So once you see that, you have your levels drawn out, etc. Now, say for instance, this, and let's zoom in real quick. Now, say for instance when this the price action came down here and it didn't bounce, it didn't consolidate, and then eventually reverse the trend. Say if it broke down, right? Because because you've already planned out your trade and you have your levels and everything already there, you've already determined what your stop is. And if it breaks down past a certain point, that's where you get out the trade, either by actual physical stop or a mental stop. But here's your support, and that's what 36.89. So maybe give yourself a little extra room and say, all right, 36.89 is a support. If it breaks down to maybe give yourself maybe like 40 cents, 30, 40 cents, depending on share size. You can give yourself a little bit more room, like if you're scaling in. But if you go ahead and put on a trade at full size, you want to give yourself maybe like a tighter stop. So maybe like 20, 30 cents. And then you already know if it doesn't hold support and it breaks down 30, 40s or something like that. At that point, just go ahead and cut the trade and take the loss. For instance, if you had 100 shares and then it breaks down, 30 cents or whatever, 40 cents, you feel me? It's not that big of a loss. You know what I mean? In order to know when to cut your trades, you have to have planned them out ahead of time and have your levels already there and have your stops in place or your mental stop. If you have none of that, you're not going to know when to cut the trade. And that goes, more into risk management and risk to reward. You always want your risk to reward ratio to be 3 to 1, meaning it's more likely that like you're risking one to make three. You know what I mean? That's risk to reward. Like I'll break it down further. I don't want to go into too much detail because again, this video is basically just to show you the plays that I took. So again, yeah, that's SOXS. That's the inverse of the SOXL, which is like I said, a leverage vehicle for semiconductor plays. Semiconductor plays and stuff like that. It's kind of volatile right now. Again, that was the reason why I was watching it. And also the Nvidia earnings is why I was watching it. Another thing, and another reason that I was watching it and what makes it so volatile and gives you a lot of price action to trade off of is the geopolitical scene in that area of the world right now. Because not only do you have you know the Russia and Ukraine bullshit happening, but there's also something going on between China and Taiwan. And if you and as you know, all a lot of our basically everything that we have and consume here comes from China, specifically semiconductors, the microchips, processors, all that stuff, like Nvidia, all that stuff comes from over there. AMD. So again, like all the processors and all that stuff, comes from over there. You got China. I don't know if they're. I don't really follow world politics that closely, but I believe China's like posturing and bullying Taiwan, acting like they're gonna invade and go in there and take their shit over, like Russia's doing to Ukraine. And if that happens, there's gonna even be more of a chip shortage. There was a chip shortage before, and again, that was one of the reasons why Nvidia ran up like that. And again, it's data points. It's just another what do you call it, factor that you can put into your thesis. If you have a certain thesis, either bullish or bearish, stuff like that is stuff that you need to know. And stuff like that I include in the daily morning briefings as well. So just something to think about.